Hello everyone, welcome again to my channel. Wow. For those of you who have been watching my previous videos on Boom and Crash, you could tell that my trainings are actually very consistent with market structure and price action. So today we're going to be looking at step index strategy. I call it the way to trade step index. Like I always say, get rid of those indicators, all those messy charts and too many confusions. See how far you've gone. So let's go. One of the first things you should do when trading any financial instrument is what I put first in all my videos. You must look at the market from a higher time frame. Guys, let go of 5 minutes, let go of 15 minutes. You cannot be consistent with such confusion, and there are just too many signals everywhere giving you different directions. In 10 minutes is buying, the next 15 minutes is bearish. It just keeps going on. You need something that's precise. So I always say, this is your day one chart. If you can see on my chart, I only have one indicator out here. That's the awesome oscillator. Then when you go to the lower time frame, that's when you see my moving average, just one moving average. You can see the settings right here. Moving average 21, shift 1, exponential close, and the visualization is to show only on hours and minutes. That will do. So let's go. So now you have your daily chart. Now this zone here is a more recent market compared to the previous one. So I'll first of all go to the previous market and I'll come back to this one. This is a more recent market. I think this is what's going to happen here. So this is it. Let's look for a market that has trended previously, right here. So we're going to switch over to our line chart, shrink our chart, zoom out, and what we're going to be spotting right here is we're going to be using the trend line. There's a rule that exists in trend line trading that at the third touch of the trend line, it's a trend line has been established. So at that point, you can begin to look for opportunities for entry, buy or sell either way. If the market is bullish at the third touch on the retracement, the trend has been established. If the market is bearish at the third touch of the retracement, the trend has been established. So now this zone right here, from here to here, is a long fall, right? This is a daily chart. So we're going to look for opportunities here and see what happens in the market. So now we've changed it to a line chart, pick our trend line, and remember, multiple touches. So we're just looking for the third touch, even the fourth touch and the fifth touch. So but before a trend can be established as a trend, it must have at least touched the point 3 times. So this is where we started from. This is the first one. This is the first point. This is the second point. There's a double top there. I'm not sure this is it, but let's see what it can. Okay, let's add down as a third touch, and this is another one. This is the fourth touch, and this is another one. So what we're going to do, we're going to mark all the zones from the third touch. 1, 2, this is the third one. This is the fourth one. This is the fifth one. Guys, when you're trading price action and market structure, general trading, you don't always have to see a perfect entry, a perfect setup. You just want to have probably over a 90% accuracy what you're doing. You understand that the dominant trend, there's a downtrend, so you're looking out for sell opportunities. So we're going to switch over to our lower time frame now. Now we've mapped out. Go to our 4 hours. What we're doing now is top-down analysis. Go to our 4 hours, look at those zones. Yeah, this is the first zone. You can see those zones, they're pretty obvious, right? See the second zone, and this and that zone. So let's take it from here first. I'm going to take this in now so I use it to get a clear view. This is what we are dealing with, this is the third one. So based on this strategy, what you want to see a bearish candle, a long candle want to see it break below your moving average 21, right? But before that happens, what you see happen is you're going to first find a struggle and a structure to be formed, right? It doesn't just break out like that. And I say, I'm going to guarantee you there are a few times you experience losses. There's no such thing as a perfect strategy. The most important thing is you want to be right 90% of the time. So this is it. How do you spot this now? You go back to your line charts. What you're waiting for, your candle to break past, close below moving average 21, retrace back. Then the second time is coming back, your buy has started. So first time went just through this is the zone right here, and map out the zone. This particular part is not too accurate, but either way you can tell that the market is going down. So you could decide to use other strategy. I do not really like to use candlestick patterns here. I'd rather choose chart patterns. So either way, you can see that there was a break below this line. You can place your sell here. So let's move over to the second time going that way. This is the second line here. When it got to this level, this is what happened again. Below the moving average, what happened? Which fell as I said. Let's check out this third one. When it finally got to this point, you can see the structures that are being formed. Guys, you can see the structure. You can see the structure. It's not even over. There is even more. You can see the structure. Double touch. 1, 2, 3, 4. And the moment candle broke through this level, there was a minor retracement, and boom, it went all the way down. If we can go back to our previous levels where we were touches and change it to line charts, you see the same structures are being formed. You see the same structures. When you go to this point, you see the same structures are being formed from here to here. Now, the reason I didn't draw from this point here is because at this point the line will be too steep. It's too slanted. You need something that's balanced, like this one I did here. So from here to here, giving you multiple touches. One is here, another one is here. Then pick your horizontal line. You're just looking at multiple touches after it has touched the peak. Guys, I hope you're getting this. Okay. And see another multiple touch here. It broke, retraced, fell. So you see why you should go to the daily chart. Same thing happened here. The line chart, multiple touches. Okay. You look up how you can draw this. Let's pick it from here. So this is accurate. Okay. Then this one, multiple touches. This is not too accurate, but we can work with it. Or you can as well buy this one here is way too far. Or even if you have picked this one and the market broke this level, you tested and could not go up again, you still be in profit. So the most important thing is that you don't want to be greedy. If you have a small account size, you have to break your 0.1 into, break it to be 0.04, 0.03, so that you be in profit. These things are not to be rushed. Guys, so I hope you understand this quick summary how to trade Roman cash. I'm sorry, how to trade step index strategy. So okay, finally I think I should show you something that's happening with step index right now. Okay, yep. Notice I didn't talk about the oscillator. It's pretty simple. The oscillator, when you see that yep. So it is easy for you. So the way the oscillator works is when you see the oscillator above the 0 line, when it's above, it's a strong sell indication. candles above is a strong sell indication. Let's keep that. If you have any question, you can ask in the comment below. I'll be able to clarify some things there. Be quick to share, like this video, and subscribe. So now this is step index strategy. This is a more recent chart. Now what's going to happen here? Talked about it before my crash. Pick your Fibonacci, draw Fibonacci from the top to the bottom. You are looking for places, how far the market will go. And this is why I always love the chart. Now also you pick a pin bar here. So this is how far the market will go. At this point, that's when you now do your top down analysis. You go to 4 hours, your weight is almost there. Then your 1 hour is above your home base, this moving average. But when it gets to this point, at this point you start noticing a consolidation. And when price consolidates here, there will be a breakout on the moving average one after forming a structure. Then they're good to go. So guys, this is it. It's already 11 minutes. If you have any questions, ask me in the comments. I'll be quick to reply and probably make a video to give more clarification. So, peace, guys.